Hey there, and welcome to my channel, The Paper Bag Investor. Today's video, I'm going to be explaining LMND's reinsurance, what it is, why they use it, misconceptions I see around their reinsurance model, how it works, what's the details of it, and what their future plans for their reinsurance might be, and how that could impact the stock over time. So if you're an investor in LMND, be sure to stick around and watch all the way to the end to get all the details. So let's get into it. Before I go any further, I want to make it absolutely clear, I'm not a personal financial advisor, just a guy with a paper bag on his head who loves investing and thinking about the future. And I also, part of the reason I made this channel is I love to see other people really become better investors, think more clearly about the future and how their investments could roll out into the be impacted in the future. And really see other people like yourselves become better investors. So if you're interested in long-term high-growth investing and really looking at the details of a company, what makes a company tick and how it could be a great investment versus another investment, I really encourage you to hit that subscribe button. And if you get value out of this video and that all appeals to you, make sure you subscribe. I really encourage you to do that. Okay, so let's get into the video. So again, LMND Reinsurance Explained is what I'm calling this. Again, what it is, why they use it, misconceptions about it, how it works, and the future plans for LMND and their reinsurance. Okay, so what is reinsurance? Reinsurance occurs when multiple reinsurance companies share risk by purchasing insurance policies from other insurers to limit their own total loss in case of disaster. So it's basically like you have your insurance policy that you're using for your customers, and then you're adding an additional layer of insurance to add protection for yourself in case of sort of a catastrophe. It's really that simple. You're basically insuring yourself as an insurance company. Okay, so that's reinsurance. So the next thing we want to go to is, why does LMND use reinsurance? Why LMND uses it? Two reasons why they use reinsurance. Number one, it's because they want to limit risk as they grow rapidly in customer numbers and number of products. So they're growing lots of new products, they're going into new countries, they're rapidly growing their number of customers, and as all these new things sort of stack up on top of each other, the scale and the amount of products, they want to limit the downside risk and especially limit a catastrophe kind of from occurring, because what if some sort of huge disaster occurred and their model and their pricing for their insurance products wasn't good enough, and they could literally mean bankruptcy for the company. It helps limit that risk as they're rapidly growing, but it also enables faster growth for them. It allows them to really grow as fast as they can grow, because while still maintaining regulatory requirements. So there's kind of this 1-to-7 ratio instead of a 1-to-2 ratio. Typically, regulator requirements for an insurance company, it's like a 1-to-2 ratio, meaning for every $2 you have of in-force premium, that's being insured, you need $1 of basically money sitting in the bank that's earning very, very low interest or no interest. It's very, very, very safe sitting there in case you need to pay out claims, right? So you need a lot of capital to grow. You're always restricted by how much capital you can have. But because LMND has this reinsurance in place, they have more of a 1-to-7 ratio. Means they can have, for every $1 they have sitting around in the bank, they can have $7 of in-force premium, because again, so much of the risk there is still being protected by all these reinsurers. So it enables them to grow faster, which for them I think is really powerful, really meaningful, because they want to grow as fast as they possibly can and take market share. And then later on, as we'll see down below, they could shift maybe some of this reinsurance requirements or amount that's reinsured, and become more profitable. But that's why they use it right now. They want to grow and they want to limit the sort of catastrophe from happening. Misconceptions I see around the reinsurance. So some people think LMND needs reinsurance. I think that's a big misconception. People think, oh, they need reinsurance. What kind of insurance company is that? They must have really bad insurance products. This is not the case. If they didn't want to renew their reinsurance agreements, they wouldn't have to. If they didn't want to grow as fast as they're growing, they wouldn't have to. They wouldn't need reinsurance, and they probably wouldn't have the reinsurance. but it's nothing to do with, they don't need reinsurance. They could definitely not have it. Okay, some people think Lemonade is really, the next misconception, some people think Lemonade is really just a broker and the reinsurance is the actual insurance product. So they're really thinking they're just sort of this technical broker with an Google app, and they're just like, what big deal is that? No, this is not the case. Lemonade is structured with their own insurance products. They're a full stack, entire insurance company. They just added on this reinsurance as an extra layer, which to me is much better than just being a broker, because if you're just a broker, you don't own the insurance products. You can't make the actual details, the underwriting and data sort of behind those policies. You can't make that better. You can't make the claims process, and that experience is good for the customer. If you're just sort of a sales broker, and acting as a sales broker for a different insurance company, that's would not be nearly as good a structure as they have, is where they really could shed those reinsurance companies and become their whole product, their whole stack of a full stack sort of insurance company that can offer everything and do everything in-house. So that's really important to understand. But that's, again, another misconception I see. Okay, so how does sort of the details of the reinsurance works for Lemonade? Essentially, every dollar of premium that they earn, so every dollar of gross earned premium that they earn, 75 cents goes to reinsurers and 25 cents goes to Lemonade. And then for every dollar of claim that is paid, 75 cents is paid by reinsurers, 25 cents by Lemonade. This is basically how it works in a nutshell. So again, most of the gains or losses is covered by the reinsurers and a little bit by Lemonade. And expiration period on these reinsurance agreements, most of the reinsurance agreements are up for renewal after 3 years. So the majority of it's on a 3-year term, and that term is expiring in June 30th, 2023. Some portion of it expires yearly, and that's up for renewal in June 30th, 2021. That again, so that's sort of fluctuating and when that expires. Future plans for the reinsurance, and my guess on how things are going to play out. My guess has been that Lemonade grows their balance sheet and their products develop, that they're more confident in their underwriting. They're going to phase out their reinsurance. This was confirmed, or very strongly hinted at, and basically confirmed in a recent interview with the CEO, Daniel Schreiber.
But you're actually saying we're not. Look, if it gets to the point where it makes more financial sense to carry all of the risk, we'll do it.
Totally. And as we get bigger, and as we have larger and larger coffers, which we do, we've now got over $1 billion in our bank account. We'll keep reviewing that. That really is something that we review periodically. And the cost of reinsurance, it's a commodity, and the costs go up and down with supply and demand. And we were able to obtain contracts on terms that are incredibly favorable. If we can renew on those terms, great. And if we can't, we'll readjust accordingly. So it's something we can be pretty flexible about.
My thought is that they will phase out their reinsurance needs by product and by geography as confidence grows. So maybe one product in one geography they're super confident with, and they have the balance sheet to cover it. They're going to phase out reinsurance for that case. And then product by product do that, and geography by geography do that. Really, though, it could take years for this to really start to happen, as they have many more products and countries they want to expand and grow into. So right now they're in this massive growth phase. And a lot of people don't understand in today's world, there's many digital companies like Lemonade they're really in startup mode on a scale that people don't comprehend, and traditional analysts, I think, do not comprehend. Traditionally, a business, it would be in a smaller market, and so your startup sort of phase would be a smaller phase, and you grow into that said market. But now, when you have a company like Lemonade, they could go global, and they have global ambitions. So their startup phase could be years, and like the company could be a huge valuation still in the startup phase. In many ways, I still see Tesla as a startup company. They're still only sold 500,000 cars last year. I mean, big whoop compared to some of the big automakers. They're still sort of in this growth phase, and then the real earnings potential is going to come later. Same thing with something like Lemonade. They still had, I think, years of growth and expansion and products they're going to create, perfect, and countries they're going to grow into. Okay, and when it does happen, and by that, I mean, if they'd start to remove and not rely on reinsurance, the trajectory of the company and its stock could radically change at that point. Could be a major inflection point, because so much more of the risk is going to go on to Lemonades themselves, and also so much more of the reward. And this radical change, radical, just like I said, radical change could occur because their earnings and could soar, and the market as a whole would understand the company and their strategy better. It'd be really obvious to the market what they're doing and where it could be going. I think currently I still see Lemonade and their reinsurance strategy is misunderstood. I saw a lot of people on Twitter, online, analysts writing articles, or journalists, whatever, analysts, people writing articles after their Q4 2020 earnings came out, and basically kind of mocking Lemonade, saying like, how does this make any sense? They have such tiny amounts of revenue, and yet they're like a $5 billion company. How does this really make sense? To me, it shows that they don't understand the sort of growth potential that the company has, and they don't understand this reinsurance potential, the removal of reinsurance that I think is going to happen. So I say all that. I hope you got value out of that. I also would say, I would love to have their CEO and or CFO on my channel to discuss these things further. That'd be really, really cool. Awesome for my channel as well. Okay, so there you have it. That's Lemonade's Reinsurance Explained. I hope you got value out of this video. I'd really love to hear from you guys in the comments down below. Let me know what you thought. I try and respond to as many comments as I can, but I definitely read all your comments, as I'm really open. I think really, really important traits as investors, you always have to be open to considering changing your mind, improving your thinking, changing your perspective on how you see something, seeing where you might be wrong on something, and always looking to being open to improvement. So good, bad, encouragement, things where you think I'm wrong, I'd love to hear it in the comments. And appreciate you guys for watching. If you got value out of this, make sure you subscribe for more content like this in the future, and hit that thumbs up too. That really helps the YouTube algorithm. Okay, I'll have to see you in my next video, and remember, it's in the bag. Cheers.